Mark, clearly the AI story has been dominating the Asia trading session, and it's easy to conclude, therefore, that Europe has been losing out. But actually this week, interesting that this week, European stocks are in danger of making gains. They have over the past 4 days as a whole. Oil is actually weaker than where it was, at a lower price than where it was at the start of the week, and yields are lower. So even on the story that we're worrying about, there is perhaps signs of tentative progress, or is that too much to hope for?
So I think there's two things there. I think, first of all, European stocks outperforming, that is the exception that proves the rule. I think you can go on assuming that European stocks will underperform for a long time to come. They have too few of the companies that the world wants, and they lack too many of the resources that the world is currently limited in access to because of the Strait of Hormuz. Separately, about the point of, you're absolutely right that markets are trading very optimistically around the Strait. There's an assumption that there'll be some kind of fudged diplomatic resolution or close to it. I think there's a general assumption in the market that the US has no appetite to re-escalate, but that there must be a solution, because it would be disastrous if there isn't a solution. I'm slightly worried by that assumption. I maybe sympathise with the idea that it's probably the most likely outcome, but I feel like that probability is given like about 98% probability by the market, when in reality the two other outcomes, either US escalating or that we just don't get a resolution and the Strait stays severely impaired for months to come, are sizable risks that are underappreciated by the market, and that is my worry going into the weekend.
Are we starting to see a few canaries, though? Indonesia raising rates by 50 basis points this week. The Philippines, according to Goldman Sachs, likely to do an off-cycle hike. You got what's going on in Turkey. You're starting to see some cracks beginning to form, Mark. Do I need to pay attention to them?
Yeah, so if the Strait doesn't open soon, you're going to see some real EM crises this year. We're already starting to see it in like Sri Lankan rupee, as you've mentioned. Philippines, Indonesia are large examples. India is a big country that might have some problems. Turkey, obviously, is a broken market, going to stay completely under pressure. Look, if the Strait doesn't open very soon, we've got some severe problems across many emerging markets. And so, like, it's a binary outcome. And the market's priced as if it's going to be resolved. If it doesn't get resolved soon, you've got a completely different trading scenario in the second half of this year if this doesn't get resolved in the coming weeks.
Do you expect some of the actions that we're seeing in emerging markets being repeated and copied here in Europe, here in the UK in the months ahead if this continues?
Actually, one of the arguments I've talked to some emerging markets people specifically this week about that EM crises are underpriced. And the pushback was, isn't it being underpriced everywhere? The risk being underpriced everywhere, including developed markets. I would say that the difference is that emerging markets, even if they're not as vulnerable on a superficial basis, they suffer much more catastrophic outcomes because the capital gets withdrawn to developed markets.